Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Coming to you live from CES 2024 in Las Vegas, Nevada, and joining me for this segment we have Krim, CEO of EDO, to discuss measuring the performance of streaming and TV advertising. Kevin, it's great to have you with us. Welcome to TradeTalks.
Thank you.
Certainly a hot topic. We think about sports and streaming ahead of the Super Bowl this year. And this was really an interesting year in 2023 in terms of how different companies are leveraging streaming, something like an Amazon as an example. What were some of the trends from 2023?
Yeah, I mean, I think 2023 was the breakthrough year for streaming becoming the mainstream, often the default way that people, both as consumers, want to consume live streaming content like big sports events, and the way that the big rights owners, whether they're traditional media companies or the new entrants like Amazon or Apple or YouTube for that matter, that's often their preference of where they want to deliver that kind of content.
Do you think we'll start to see industry consolidation when it comes to streaming, whether it's this year or in 2025? It seems as if there's so many streaming services out there for consumers, and you're going to have to start to pick and choose where it makes sense. I mean, is it an a la carte thing, or do we see consolidation like we saw with the cable companies?
I think it's going to be driven both by the consumer need and by the business demands of how expensive this kind of programming, this kind of content is. And we at EDO, what we're measuring is outcome measurement for streaming and traditional TV, and what we see is that streaming, especially live sports, generates the highest engagement from consumers, not only with the programming, but with the ads in the ad breaks in the programming. And that higher performance means that it's worth paying more for as an advertiser. So there's more money being generated by these kinds of live streaming events, and that's driving the economics of them having to pay more to get the rights to it. So Amazon bid a huge amount of money to have Thursday Night Football, to take over those rights. That was a record amount of money being paid by a broadcaster to the NFL for those rights. And it's worked out for Amazon because they've been able to charge real premiums for advertisers to advertise in Thursday Night Football, and it's having a knock-on effect, helping Amazon get confident in launching a new ad-supported level for Amazon Prime Video.
So then global ad spend, you're seeing it shift more to the streaming?
We're seeing growth overall. Mm-hmm. It's really the only part of media that's, besides the huge advertising giants like Meta and Google, it's the only other part of the media ecosystem where you're seeing increases in overall ad spend. And yes, there's also a shift going on from traditional linear television over to streaming.
Mm-hmm. So, and you expect ad revenues to continue to increase leveraging these types of platforms?
We do. Of course, overall ad spend is generally very much tied to the economy and growth in the overall economy, but we expect overall growth in the economy, so do major players like WPP's Magna or IPG, Interpublic Group's arm as well. And you also see growth in that streaming-driven ad revenue. The ad-supported tiers in these streaming platforms is giving consumers more choice because they have more inexpensive price points to enter these streaming services. The owners of these platforms are also have a chance to crack down on things like password sharing by offering a lower price tier to those consumers when they are ending the password sharing.
Let's talk about EDO in more detail here. How are companies and partners leveraging your solutions? Tell us more about the solutions and what you can do with them.
Right. In a streaming first world, advertising behaves a lot more like digital advertising than in traditional television, and that makes outcome measurement, the kind of behaviors that marketers are trying to achieve when they run ad campaigns, things like people searching for the brands, going to the brand's websites, going to offline stores. Those are the kind of things that we at EDO measure, lift in those kinds of what we call predictive behaviors of eventual sales, but you don't have to wait for them. They're very useful signals to marketers of whether something's working or not. And what we as a company are seeing from the buyers and sellers of streaming advertising is that in a streaming first world, those kinds of signals of what's working are more important than ever. And fundamentally, it helps them understand what's it worth paying for as a buyer, what's the right price to set as a seller, and that kind of value discovery is what's at the heart of what we think good outcome measurement.
All right, Kevin, appreciate the insight. Thanks for joining us on
Thank you,
TradeTalks. And thanks for joining me from CES. I'm Jill Malandrino, Global